Well, hello and welcome to Global Mantra, the show that brings to you prominent fund managers from the City of London and gets their views on the global market environment. Joining us today from the private equity space and more in an advisory role is Mr. Jitesh Gadhia, who's Senior Managing Director at the Blackstone Group. Jitesh, thanks very much for taking out the time. Appreciate it.
Pleased to be here.
Let's start off by understanding the broad trends in deal making that you foresee in emerging markets as well as developed markets, given that 2011 is really being touted as a year where the overall value of deal making is pretty much is likely to match the values in 2007 or perhaps even beat that value.
Well, year to date, interestingly, despite the global backdrop, we've had the most active M&A market since 2007 with over $500 billion of transactions announced already. And if you extrapolate that for the rest of the year, that would mean in excess of $3 trillion of global M&A activity, which is about 20-25% growth on last year, which itself was a 20-25% growth on the previous year. So I think clearly the data so far and the data points so far indicate that this will be another very active year for M&A. And within that, interestingly, the emerging markets will play a increasingly important role. Last year, the growth in emerging markets M&A was about overall 75%, i.e. 3 times as much as the growth of the overall M&A market, represented about a third of all M&A activity globally. And I think over the next few years, maybe not this year, but certainly over several years, I think emerging markets M&A will start to represent about half of global activity.
That's a big number. What's the sense in terms of investor confidence as far as M&A activity is concerned? Given that you represent a PE shop, what is the sense that you're getting about risk appetite?
Well, look, I think things are changing in real time with the events in the Middle East and in Japan. So I think there is a sense of probably heightened risk aversion, but the good thing is that I don't think there is any element of panic. And I think the most interesting thing is really how do you get a lot of the cash and the cash hoarding by corporates that has been going on for the last several years, quite understandably, and estimates range from a few trillion to, I saw one estimate of 8 to 9 trillion of cash on corporate balance sheets. How do you actually get the animal spirits back amongst CEOs and within corporate boardrooms so that some of that cash is recycled into investment, into M&A, into growth? And actually that's a challenge equally, I think, for policymakers as well, because that's one of the key levers in order to stimulate economic activity.
So for cash-rich companies, this is a good time to go out there and acquire, potential targets or expand businesses. But what about companies which may not be having a positive cash flow but are still looking at expansion activities? Do you think the market is conducive for those kind of companies to actually go out there and buy shops?
Yes, and I think for those companies that need equity or are in need of equity, the last year was a very buoyant year for global IPO volumes, and again, start of this year has been, I think, with about almost 25 billion raised through the global IPO market, the best start to any year ever. Clearly, we have to see how that pans out for the rest of the year.
Without getting specific, which are the markets which are most active right now, or which are on the radar for companies in the emerging markets or the developed market space to set shop in?
Well, there's been an interesting debate about, where do you go from the BRICS? And obviously there is something called the Next 11, which people talk about, and various other acronyms. I think there are 2 markets that we see as very interesting. One is Indonesia, which I think has the potential to be the sort of, if you like, the emerging market of 2011 in terms of the attention it will get. And the other is Turkey, which is, in a European context, Europe's emerging market. We're seeing a lot of activity there as well.
All right, Jitesh, we'll take a short break on that. Now, when we come back, we will discuss India in specific and the deal potential there in the region.
Quite possible that in 2011 you will see approaching or even exceeding $100 billion of activity in India relating to both inbound and outbound M&A. That's quite possible.